everyone, and welcome to this webinar on the Conservation Land Donation Tax Estimator, a new tool created by the Corvus Center for Conservation Policy. For those of you who were part of the webinar on February 2nd, this may sound a little different because we had so many technical issues, one of which was the recording didn't actually play through. So we're re-recording it. My name is Guy Greenaway. I'm the Executive Director for the Corvus Center for Conservation Policy. For those who don't know us, we are a not-for-profit charitable research organization based in Calgary, Alberta. We focus on how decision-making affects biodiversity and nature conservation, and our mandate is to work to ensure that biodiversity is actively supported by decision-making. And we do that a variety of ways by undertaking applied research, program facilitation, knowledge mobilization, and projects like that. Also, a number of the folks on the webinar don't know me, so I'll just give a brief introduction of myself. My name is Guy Greenaway. I have worked in private land conservation for the last 30 years or so in a number of roles. I've been the Executive Director of a land trust. I have been the chair of the Alberta Land Trust Alliance, which is now defunct. I was facilitating creator of the Regional Land Trust of Alberta, which is still around, and I'm the chair of the Capacity Building Committee for the Alliance of Canadian Land Trusts. And I have worked in this field and spoken, written, and done a number of research projects on private land conservation and conservation easements specifically. This project was made possible because of two funders who are helping us out, the Alberta Real Estate Foundation and Alberta Innovates, and we're very, very grateful to both of them. Actually, and I'll also mention that Mike Ostroff from Dart Bryant accounting firm was really helpful in reviewing some stuff for us, though if there's any mistakes, they're not Mike's fault, they're my fault, but we really appreciated his help. So the webinar today, I'm going to do an introduction of what the tool is, why we did it, why we decided to create something like this. Then I'm going to back up and go through conservation land and conservation easement donations from a tax perspective. And also, again, from a tax perspective, what's different between the provinces and what's the same. And the reason I'm doing that is that currently the tax estimator is programmed for the province of Alberta, but I want to show just what the similarities are and how different we are between the provinces such that you can see whether or not the tool will actually work for giving a pretty good estimate in your province. Then I'll actually get into the tax estimator, describe what it is, how it works, what it does in the background. And then we'll do a walkthrough of the website and a walkthrough of the actual tool, which is in an Excel spreadsheet. I'll talk more about that later. And then questions at the end. So first of all, by way of introduction, I want to start with the ever important disclaimer. I am not a lawyer nor an accountant, but even if I was, I'm not your accountant. I'm not an individual's accountant. And that's really critically important because you need to have that person who knows the details of your financial and tax situation to work on coming up with actual numbers for you. This is an estimator. It's not a calculator. There are a number of things that will be particular to a given landowner and a given parcel and a given recipient of that gift. As I mentioned before, it's really important to understand the context you should take these numbers in. It's only your tax, financial, or accounting advisor who knows your circumstances. So again, the estimator cannot give you a definitive picture, but it can give you a very informed and comprehensive picture based on a limited amount of information going in. Okay, so why we created this tool. Starting with the circumstance that everybody on the webinar is probably very familiar with, the financial and the tax implications of making a land donation or a conservation easement donation are really critical for a landowner to that decision. But getting even just a very rough idea of this requires super detailed, very personal information. And that's not something that we want to dive into when we have that first meeting with a landowner, sitting at the kitchen table and saying, hey, tell us, how much you have in your bank account. That's part of the relationship that comes later on, but this is part of the information that they want to have up front. So who do we design it for? Kind of two groups. First of all, landowners. Any landowner, one with just a basic grasp of their financial circumstances, they don't need to know it in detail, can enter the necessary numbers because there's a limited number of numbers that you have to enter. And then they can get an approximation, something that will tell them, is this even feasible? Is this in the realm of workable for what they're trying to do and what their circumstances are? And the second group is land trusts. Land trust personnel can use this to get a picture of the tax and financial implications of various scenarios. So they can start to run an individual landowner's information through and show that landowner, if you did this, it could look like this. If you did that, it would look like that. And you're able to then compare these scenarios and determine, are there tweaks that could be done, and what would be the impact on the taxes and the finances of that donation if those tweaks were followed through with. So in summary, the power of this tool is, one, that it provides that basic information, the ability to get these estimated values for a given donation circumstance, and the scenario creating power. So the ability to compare those different mixes of donation factors that can have a big impact on what the final numbers look like. Okay, so the next two sections, and I should have mentioned this when I was talking through the introduction and the outline, they're not really necessary. They're not information that you need to have in order to operate this tool. But what they are is critical background information that for anybody who is operating the tool, they'll probably come to these questions. They need to have this information, and especially if you're a private land conservation practitioner, these are question areas that you're going to get from the landowners that you work with, and having this information can be really helpful. So first of all, making a donation to a qualified organization. The basic process is you get a charitable tax receipt, or what the Canada Revenue Agency, CRA, calls an official donation receipt. And that receipt is used to calculate what's called a non-refundable tax credit, which is exactly what it says. The tax credit is applied to your payable tax. So that's the first thing that needs to be calculated. How much tax do you owe? And then the tax credit is determined. And again, that's not the amount that's on the tax receipt. The tax receipt is multiplied by a number based on the jurisdiction to give you how much of a tax credit you're going to get. And that deduction is then applied to your tax payable. And it's non-refundable. So it's not like you can get a check for the available amount that wasn't used. That remainder is carried forward. And there's some different rules around how that's carried forward. And I'll just note that this is slightly different for corporations, but I'm not going to go into that in detail right now. Functionally, it's pretty similar, but there are some significant differences. Okay, the first point I want to note is the importance of understanding that this is not like other kinds of programs or incentive programs in the land conservation or land stewardship world. This is not a stewardship payment. It's not a payment for ecosystem services program. This is a disposition of land or of an interest in land in the case of a conservation easement. And disposition is that technical legal term in real property worlds for having gotten rid of a piece of land. And whether you did that by selling it, by passing it on to an heir, by gifting it, that's always called a disposition. And in the case of the fee simple, the full title disposition, it's the entire parcel that is disposed of. And in the case of a conservation easement, the disposition is a disposition of an interest in land. And the way I like to think about this is if you consider land to be like a cake, if you take a slice of that cake, like a 40-acre parcel out of that cake, 40 acres out of your 160 acres, it's separated, it's valued, and it's disposed of. With a conservation easement, it's similar but different. It's not a slice, it's a layer. It's a portion of the rights and opportunities associated with all of the land, but it's not all of those rights and opportunities. But again, it is disposed of. It's valued and it's disposed of. So one of the things that this implies is that valuation is not arbitrary. It's not based on however much money the program had or however many years it could last. This is a professionally assessed fair market value. A qualified appraiser is making this assessment, and the landowner receives full compensation of that market appraised value. And they can receive it in a couple of different ways. One, they can receive it as a tax receipt. Two, they can receive it as cash, or three, a combination. And most often it's a combination. Usually it's a tax receipt with a small amount of cash if that's available through a granting program. But the valuation process is always the same. So sometimes you'll hear these programs described as providing a tax benefit or a tax advantage, or it's a payment program. It's not. It's a payment for disposition of land. Nothing more, nothing less. Especially in the case of conservation easements, you'll hear this question, well, why don't you get paid every year? I'm involved in these other programs and you get paid every year. That's because it's a disposition of land. You dispose of it once, and you get compensated once. Okay, the other area that's important to understand is capital gains and the taxes on capital gains, because this is something that, again, we hear a lot, especially in the context of the gift part of this. Why do I pay capital gains taxes on a gift? Why am I being taxed on a gift? And the short answer is you don't, but you do have to pay your accumulated back taxes. So what that means is, if we think of capital gains as starting with understanding the current value of your property. So this bar represents the current value of your property. And this is what the original value was of the property when you first purchased it, referred to as the adjusted cost base. So this green line then represents the increase in the value of your capital property, or the capital gain. And not all of that is taxed. Only half of that currently is taxed. That portion of the capital gain is what you will pay taxes on. Okay, so think of this in a multi-year perspective. You start with your original purchase, but over time, that property is going to increase in value. So that calculation that we were just looking at will happen in the first year. There's an increase in the value. Half of that value is taxable. And then that continues on year after year until you make the decision to make a donation. But it's the donation at that point that is taxable. So the taxable capital gain is calculated every year, but the government lets you wait to pay until you dispose of the property. And a similar kind of situation could happen with property taxes, where you might get an agreement with your local municipality that you will pay a lower amount of property taxes because you have a very high value, but perhaps inflated value given the circumstances of development in your area. And the municipality will say, okay, well, we will defer that, but when you sell it, when you dispose of the property, that's when the taxes are going to have to be paid. So it's the paying of taxes that have accumulated over the time that you have owned that property. A couple of other things that are important to understand, and sometimes there's misconceptions about. First of all, you only pay capital gains taxes on the portion of the land you dispose of. So in the case of fee simple, if, again, use my example, 160 acres and you dispose of 40 acres, you only pay capital gains taxes on the gain associated with that portion you disposed of, that 40 acres. And it's the same thing with a conservation easement. If your conservation easement was deemed to be worth, say, 20% of the value of your land, then only 20% of that gain is going to be taxable. And the second thing is the lifetime capital gains exemption. And this doesn't apply to everybody, but for qualified farm or fish property, certain amount of capital gains taxes will be forgiven over an individual's lifetime. And any individual who has that can use that in any tax year, and whatever amount they want up to that limit, and they can do that until that full amount is used up. If you have that ability, you probably already know about it. The second thing is that capital gains taxes can be deferred. So in some cases, the taxes can be deferred on, for example, certain agricultural land that's being passed on to an heir. But it's really important to understand that these taxes are being deferred. They're not being erased, which means your heir in that situation now is liable for the taxes you accumulated during the time that you owned the property. Okay, the next thing I want to talk about in the context of conservation land and conservation easement donations is cash payments. If you receive any or all of that compensation in cash, it's considered differently in the context of taxation than the tax receipt. So the amount you receive in cash is not taxed as income, but the capital gain it represents is taxed. So even if your gift is certified as an eco-gift, the tax benefits that you get from eco-gift certification only apply to the gift, not to the cash payment. So I'll give you an example. Say a landowner grants a conservation easement or transfers a conservation property, doesn't matter which. They receive of the compensation, 20% of that is a cash payment. And then they donate the rest. 80% of the compensation is received as a charitable tax receipt. And then the gift is eco-gift certified as a gift of ecologically sensitive property. So 80%, the gift portion, is exempted from capital gains due to that certification. But 20% of the calculated capital gain is taxable because that wasn't a gift. That was received with cash. Okay, what's different across Canada? What's the same from a taxation and terminology perspective? And I want to mention this because right now, as I said earlier, the tool is programmed specifically for the province of Alberta. We're currently looking for funding to be able to create a different iteration of the tool, a separate spreadsheet that you would download for each one of the jurisdictions across Canada. But there isn't as much difference as you might think, given how much similarity there is in the way taxes are considered across Canada and the way donations are considered across Canada. So, first of all, I'm going to talk terminology. These are the jurisdictions, the colored ones. So anything that is in kind of a background cream colored doesn't have conservation easement legislation. All of these jurisdictions have conservation easement legislation of some type. The majority of them use the term conservation easement, as does the majority of jurisdictions across the continent and in other countries. But some jurisdictions use the term conservation covenant for a very similar tool. Some use the term conservation agreement. Recently in Ontario, the term conservation easement agreement has arisen because I think they thought there wasn't enough confusion with the terms. And also in Quebec, there is the servitude de conservation, which is slightly different but similar. For those who may not be aware, the common law system is in place in all of Canada's jurisdictions except Quebec, which uses civil law. And the easement concept is a common law concept. So servitudes, covenants, all of those kinds of devices, they do exist in civil law. They're treated somewhat differently, but they don't have conservation easements per se. But for the purposes of the Conservation Land Donation Tax Estimator, and for the purposes of just taxation period, these are all the same. They're all conservation easements, and they could be considered the same in the way you do the calculations within the tool. Okay, from a taxation perspective, what's the same? All provinces use the same federal T1 general tax form. And then each province in various ways, Quebec in a slightly different way, but essentially each province will have a form that riffs off of that federal form in some way. So the calculations that happen on the federal form are then carried forward to the provincial form. That means the taxable income calculations are generally quite consistent. The capital gains calculations are the same. So what's different? I threw up the rates of income tax on $100,000 a year income because, as you may be aware, those rates change depending on how much income you have, but I'll just use that as a basic measure. The federal rate is the same for everybody, 20.5% currently. And then the provincial rates range from 9.15 to 19% for an average of just under 14%. So it's important to note that for everybody, 20%, 20.5% is done the same. The next part of the puzzle that we have to consider is the charitable donation rate. So remember I said you take that tax receipt and it's not that amount that you put towards your tax deduction, it's the multiplication factor. And so federally, that's 29%. Provincially, that ranges from 11.16% to 25.75%. For an average of just over 17%. And it kind of turns out that the higher the provincial tax rates, also the higher the charitable donation rate. So some leveling out starts to happen in those cases as well. As I mentioned, the tax estimator is currently programmed only for Alberta. But when you look at this, federal rate 20.5 for everybody, provincial average is about 14 and Alberta is 10, so just a difference of 4 percentage points. The charitable deduction, 29% federally for everybody. Alberta is 21, provincial average is 17.4. Again, a difference of about 4 percentage points. It will make a difference, but it doesn't make a massive difference in terms of the threshold points for an individual landowner using the estimator tool and deciding whether or not this is something that's viable. And again, it's an estimator, it's not a calculator. Okay, the Conservation Land Donation Tax Estimator. The first thing is, it's on a website, thecorvus.ca/tax-estimator website. And there is no cost to it. There is no registration required for it. And you do not upload any personal data. Instead, what you do is you download an Excel spreadsheet and you add your information into that and you add your personal information into that, and it stays on your on your computer and is never shared with anybody that you don't want to share it with. 3 critical points here. First is, this is an estimator, not a calculator. The second point is, and I'm not sure if I've mentioned this, but it's a calculator. It's not a calculator. It is an estimator. And the most important point is, it's an estimator, not a calculator. And I do this a little bit jokingly, but I guarantee that there will be people who will not take it in the terms that it's intended, that this is an estimator, not a full-on calculator. Okay, so what does it do? It starts off by just assuming a base level of financial information, the information that you enter into it, and it runs that information through the actual tax forms in the background. And it returns the results in real time. So you will see all of those results when you enter that information or change any of that information. So when you tweak it, you will see instantaneous result changes. What the user enters is pretty simple. You have to enter the fair market value of the property, if it's a fee simple donation, or if it's a conservation easement, the value of the property without the conservation easement and the value of the property with it, the price you originally paid for the property or the adjusted cost base, the cost of disposing of it, so appraisals, legal fees, etc., and the amount of cash compensation, if any, that you have received. You also include your untaxed income, and I'm just using that term to reference any income like farming income, self-employment income that is based on money that you receive and you don't have tax deducted from. So if you have an employment situation where tax is deducted, you don't enter that information, but self-employment income and farming income does get entered in. What the estimator considers is quite a range of things: the federal taxes, the Alberta provincial tax rates, and it's the detailed exact information from those calculations. It includes basic personal amount and age exemptions to standard exemptions that get applied. And then it considers all of the aspects around the donation of land and the donation of easement, the capital gains on those donated lands, whether it's qualified farm or fishing property, whether you want to use any portion of your lifetime capital gains exemption, and your ability to state exactly what amount you want to use, and whether you have certified or plan to certify the property as a gift of ecologically sensitive land. And in that case, that's just a yes or no question. So you can turn it on and turn it off and immediately see all of the implications of those two different scenarios. So what the estimator does not consider is considerable. There's a number of different things here, but these are all things that are not part of, quote unquote, the standard donation scenario. So Do you have income from old age security? Do you have you made other donations? Do you have other capital gains? All of these things are not included in here. Just sort of assumes a very simplified version of yourself and your financial circumstances. One thing that the tool does include, and this is where I got help from Mike Ostroff from Dart Bryant Accounting, was a list of questions that you can take to your accountant, because not every accountant is familiar with land conservation donations, and especially conservation easement donations. So there's a number of questions that you can just print off and take with you when you go and talk to your accountant, and make sure that you get answers to those so that you can get the best optimization of the use of a tax receipt, the best estate planning information, and a couple of other key points that may arise or may not arise. Okay, we're going to do the walkthrough. The elements of the walkthrough, I'm going to show you downloading the tool. I'm going to show you entering the information. I'm going to show you how you interpret the outputs, the summary information that comes. And I'm also going to talk about the future years information, and again, how you should interpret that. And then after that, we're going to have questions. And if anybody has questions afterwards, this is my contact information. So feel free to use that and contact me if you want to get more information about the tool or have questions about it. Okay, first things first, the website. The website is extremely simple. It's just a single page. It has the information, some of the background information that I've just been talking about. It has images that show you what the tool will look like, and a little bit of high-level information about the tool, and some FAQ kinds of questions, thanks to our supporters as well. But the main thing is this button right in the middle, start using the tax estimator and download the tool. And it gives you the description here that it's a simplified Excel spreadsheet. You do not need to be an Excel expert to operate it, but you will need Microsoft Excel to use the tool. Click download the tool, and that will download a copy of it to your computer, which stays on your computer and stays with you as you want. There are only 3 tabs on the actual spreadsheet. The first one, the start here, gives you all of the information that is included in. Adjust this just a little bit. There we go. All of the information that was included in this presentation. So some of the background around why it was created, what kinds of information you have to put in, what's included in the calculations, what's not. And as I mentioned, it has this questions for your accountant. All of these different questions that you should print off and take this to your accountant so you get the best information for your specific circumstances. And then the third tab is the estimator. And Excel is not a graphics program. It's not about pretty, so the formatting is a little bit clunky, but it's relatively straightforward. There's 5 sections here. The first one is entering the following information about your gift, and you list all of the things that you're going to need to put in for information. And I'll run through that in just a second. Then you add some of your financial information. And then on the other side, you see a summary of the outputs, you'll see the unused tax credits, and you'll see the remaining charitable tax receipt. And again, I'm going to show you a run through and all of that stuff in just a second. The way this is set up is you enter information in the green boxes, and it's locked so you can't enter in any of the other boxes, and you can't accidentally change the programming and make the tool unusable for yourself. So it's very straightforward. These are the only questions. This is the only information that you need to add. So, for example, if you entered information about a conservation easement, it shows up on the right, but you can also click where it says conservation easement, change that to fee simple, and it immediately changes all of the information on the right, and it even changes the titles on the left. Fair market value of the donated parcel, whereas if it says easement, it's fair market value of the parcel before granting the easement and after. Then you have to add in if there was any amount of compensation received in cash. If the gift is certified as a gift of ecologically sensitive property, i.e. an eco gift, and again, that's just a yes and no. And if you switch it to yes, everything changes on the right-hand side to immediately update that. And when you change it back to no, again, it all changes. You have to enter the amount that the purchase price of the property when you first bought it, or the adjusted cost base. Any costs of disposing of the conservation land. So this is for the capital gains calculation, any costs you spent on appraisals or that sort of thing. And then, is this a gift of qualified farm or fish property? Then your financial information. In the year of donation, what was your net farming or self-employment income? It even lets you indicate if you're 65 or older, because there's an age exemption that is available if that's the case. And the amount of remaining lifetime capital gains deduction for qualified fish and farm property. If you have this, you know you have it. If you don't, there's information down below here that explains what it is, and also explains what the deduction limit is for the given year. You can't add anything more than that maximum amount, but you can add whatever amount you want to put in there. And then once you do all of that, on the right-hand side, you immediately get a summary of the information. So the value of, in this case, it's a conservation easement. Again, if I were to change that and say fee simple, it would say the value of the conservation property. The value, the fair market value of the property before the easement, after the easement, compensation for the grant of the easement. In this case, that was $95,000 in charitable tax receipt and $5,000 in cash. The capital gain calculation is summarized. Fair market value of the gift, value of the cash payment, subtracting the adjusted cost base, in this case of the easement, minus the cost of disposal. That gives you the total capital gain. And then you get the taxable capital gain. That's calculated in the background. And the taxable capital gain on the purchase portion. So the gift and the purchase portion are separated. That's your taxable capital gain. Then it summarizes your reported income for the year, both what you put in plus your taxable capital gain. It gives you your annual donation limit for the first year, which is 75% of your income if it's not an eco gift, but if you had chosen eco gift, that changes to 100% of the income. There's also some consideration if it's donated capital property that's not certified. And then finally, it gives you your federal tax payable and the tax credits that you have from the donation, and the same thing for the province, and what your tax owing is for each case and total. And in this case, in this scenario, the tax credits exceeded the tax payable, so it comes to a zero. It won't go into the minuses, it'll just say zero. But then it tells you your unused tax credits. So this is the unused portion of the federal non-refundable tax credit in year one. So remember, you create this tax credit, but it is not a refund that you get, but that will be available for use in future years. And that is the tax credit. It's a little bit different and a little bit difficult to know exactly what's going to happen in future years because your circumstance changes. But what this does is say the remaining charitable tax receipt beyond what you used in year one, here's the amount that you have left. It tells you what your annual donation limit would be, assuming that your income was exactly the same, and the amount of tax receipt that you have to carry forward on top of what you had in the first year. This is why it's tricky to calculate this, because there's sort of two different things going on here. But again, it's an estimator and it gives you a basic idea. Now this rolls it forward 6 years because that's as long as you have to use that tax receipt. But again, if it's an eco gift, then that changes to the year of donation plus 10 additional years. And your donation limit is recalculated and the amounts that you have to carry forward is recalculated. And in this case, in this scenario, it's done after year 2, but in other scenarios, it might continue on. You will know that when you enter the information and see what the results are. So that is the details of the Conservation Land Donation Tax Estimator. Again, this is my contact information. My name is Guy Greenaway. I'm with the Corvus Center for Conservation Policy. And if you have any questions about it, please let me know. The website will be updated on a regular basis. As tax years change, we will be changing the tax information so that it's current. And we will be seeking to create versions for each of the other provinces and territories that have legislation for conservation easements, that have the ability to do tax to do donations that have a tax receipt opportunity for land conservation. So with that, I'll finish up and just say thank you very much to everybody who participated in the webinar. And I hope that you have a good World Wetlands Day on this February 2nd.